Many people in America have cars because there are lots of roads. Cities are spread out. There's not enough good public transportation. Cars are important in their culture, and since some places are far apart, having a car for personal travel is needed. But as time goes on, owning these beloved vehicles has become really expensive. This money problem is clear when you look at the big numbers. More than 100 million Americans now owe money for their cars, and together they owe a huge amount of $1.5 trillion. This money issue is almost as big as the importance of owning a home. So getting cars is connected to the tricky world of borrowing money. This video will delve deeper into this matter to understand why Americans have an issue with car loans now. As we enter the year 2023, the numbers show that people are now paying an average of $725 each month for new car loans, which is a big increase from last year's $650.20. This tells us that the cost of cars is going up a lot. If you decide to buy a used car, the average monthly payment is $516, which is only a small 2% increase from last year. This shows how much the car industry and banks are connected and affect everyone. Buying a car involves frustrating experiences due to rushed decisions, complaints, and unfair treatment by lenders. This lack of trust highlights the need for a consumer-centric change in car loan systems. Car loans involve borrowing money for a car and repaying it gradually, requiring full ownership after clearing all monthly payments and interest. Let's look at Sean Miller's example. He got a $48,000 car in 2019, put down $10,000 at the start, and got a loan with a 3.89% interest rate for 72 months. This means he'll pay about $590 every month. In total, he'll give out almost $5,000 just in interest. But remember, until he fully pays the loan, the lender still owns the car and can take it back if he misses payments. I'm paying a ton of money right now for a car that I don't even really need, and I've been struggling to sell it, said Sean Miller, 32, who took out an auto loan for his car in 2019. If I were to sell it today, it would probably be at a $10,000 to $15,000 loss. Sometimes, even with everyday car payments, bad things can happen. Imagine a lady whose 2011 Acura with her 1-year child inside was taken away because she couldn't pay. This shows how serious it is if you miss payments. They can use technology like switches to stop the car from working. This is called repossession. There are two main types of lenders, direct and indirect. Direct lenders, like banks, give you money directly for the car. Indirect lenders, like dealerships, guide you through the money part when you choose a car. They send your information to lenders like Chase, who decide how much money to give you. About 80% of car loans are handled by indirect lenders, showing how important they are. Our primary goal is to put customers in financial products that they can afford, said Chase Auto CEO Peter Marugi. Our number one priority is our consumers, and so we have put a variety of processes in place to ensure that this is the case. In this money dance, your credit worthiness is the main factor. This indicates how likely you are to pay back the money. The interest rates and loan rules depend on this. Lenders look at things like money you own, money you owe, how much you make, and your credit score. Places like Chase Auto have loans for people with credit scores above 620, usually around 700. Toyota Financial Services mostly helps people with good credit, but they also work with people with different credit scores. In 2022, Toyota was a leader in providing loans for cars. They did this in two main ways: Toyota Financial Services and Capital One Auto Finance. A representative from Toyota said their success came from working together with other companies, making customers happy and having good relationships with car dealers. Toyota's financial division helps dealers and customers afford cars by offering loans for buying or leasing. Outside of purchasing your first home, a new car is the second largest purchase for most people, said Joanna Dean, Vice President of Sales at Toyota Financial Services Group. Given the transaction prices and vehicle prices today, financing is required to buy these vehicles. In the year ending in March 2023, the part of Toyota that deals with money made 21% more money compared to the previous year, reaching about $19.8 billion. The part of Toyota that actually makes cars also did well, making 18% more money. Toyota, the world's largest car company, remains successful despite industry issues like chip shortages and significant price hikes. For half of car financing comes from non-bank companies, which can face challenges in securing funds to facilitate car purchases. Things have changed from a time when it was easy to borrow money to buy a car. Now that prices are going up and the cost of borrowing is going up, it's harder to get a loan. In the first part of 2023, the average interest rate for a loan to buy a new car went up to 6.58%. This is higher than the 4.1% it was in 2022, and the highest it's been in 15 years. Due to factors like part shortages and rising costs, car prices have increased, leading to higher borrowing. Car loan debt has doubled in the last decade, particularly impacting young generations, Gen Z, and millennials. By 2020, these groups could collectively owe $20 billion in overdue car payments. Some people are worried about how car loans work, not just how much they cost. Buying a car can be frustrating because some car sellers do things that aren't fair or even legal. They might care more about making money than helping people. They might do things like charge more for loans without telling the customer. This makes things unfair and hard to understand. Even though there are rules about this, they're not always followed, and people get upset. A while ago, Massachusetts officials and Toyota settled for $7.6 million over claims that Toyota unfairly collected loans from people. Toyota was accused of not giving enough information about how they calculated the remaining loan amounts after taking back cars. Toyota says they're fair but won't talk about the settlement because of the state's accusations. Back in 2016, Toyota also settled for $21.9 million because it was accused of treating Black and Asian borrowers unfairly by charging them higher interest rates. Other car companies have similar claims because they add extra costs. Toyota hasn't said anything about this settlement or a report from a former bank economist that says minority borrowers often pay more. This happened because of things like credit scores, where minorities can get charged more even if they're not more likely to miss payments. It's important for companies to be clear about their decisions. They're trying to give everyone fair chances for loans no matter where they're from. In 2017, Chase Auto was sued for taking back cars in illegal ways that broke debt collection laws. They agreed to pay $3.25 million in 2018 to settle the lawsuit. Chase Auto says they follow the rules by testing and checking. Talking about protecting consumers, in 2022 there was a proposal to make rules against car dealerships doing unfair financing stuff. This was about issues like tricking people, adding hidden fees, and not telling the full cost. Many people have been hurt by unfair loans, so rules are needed. But in July 2023, a law stopped the proposal from being enforced. This means the rules were delayed. People who look out for consumers want more rules and honesty. Unlike knowing how much bananas cost, knowing car prices is confusing. Should people know what rates Chase offers? Yes, being clear is important. Chase's rates should be available online and at their stores. Till things change, it's important to be careful. Experts say to look around, check credit scores, get online approval, and see if credit unions and banks have good deals. Credit unions have rates around 6%, and banks have rates around 7 to 8%. Websites can help compare rates. Be smart about it. Toyota's Smart Path lets you look at cars and get loans online, like in a real store. Going to different stores helps to compare. It's best to avoid places that charge a lot of interest, such as buy here, pay here dealerships. Do your research, ask questions, and keep trying. Feeling too much pressure? Don't rush to sign anything. Ask for more time and come back later. Remember, voting is important. People who care about consumers need to make good choices. Without them, things won't get better. So have these insights reshaped your understanding of car financing? Are there alternative approaches to consider? Share your thoughts below. If you found this discussion valuable, don't forget to like, subscribe, and hit the notification bell for more thought-provoking content on personal finance. Thanks for watching.